Ladies and gentlemen, welcome back to the Crypto News Podcast. Your host here, Matt Zahab. We are buzzing as always. Guys, I look so white right now. It's insane. I don't know what's going on with this lighting. I gotta get a couple bright lights. I'm literally cast with a ghost. I mean, I'm wearing a white Nike hat right now, and my skin is like the same color as this hat. I guess I gotta mix in a tan, and I gotta figure out my lighting. Not a good look. Our guest today looks great though. We have Macbrennan Peet on the show today, founder of Project Zero, the first multi-venue DeFi native prime broker on Solana. He's built and scaled multiple companies across finance, trading, and health tech with multiple successful exits and acquisitions, previously founding and then exiting Temporal, selling Cabana Health, and being acqui-hired from his hedge fund, KCM. He also co-founded marginfi, a leading decentralized margin protocol, and MRGN, almost fumble F that one, Research. Earlier in his career, he worked on mid-market deals at MedEquity Capital and in institutional consulting at Morgan Stanley. Also advised companies like Late Checkout and founded 2 cancer-focused nonprofits. Jesus, what a bio. Electric Factory, Macbrennan.
I didn't know you were gonna go through all of that. That's crazy.
I skipped some too. Holy, what a bio. Welcome to the show, dude. Pumped to have you on. How are you this morning?
Good, man. Thanks for having me. I really appreciate it. Yeah.
I'm pumped. I mean, honestly, let's just jump right into it. We'll go back to your the history of you, and you've done some incredible shit. Holy, and we'll get into that towards the end of the show. But let's start with Project Zero. Let's start with the inception point and then get into what exactly is a DeFi native prime broker. I feel like a lot of folks don't know exactly what a prime broker is, but it's an integral part of finance. One of those things that really just sort of keeps the flywheel buzzing and makes the finance wheel turn. So give us the inception story. Why did you start this? And what exactly is a DeFi native prime broker?
Yeah, great question. So I think we're at the point in DeFi, like a very tangible inflection point where there's now venues that have staying power, have sort of like carved out their, slice of the market. They're not going anywhere. They're very well they're trusted, users love them, etc. The only problem is like these different venues do different things. So I'm talking about venues like Aave or Hyperliquid on Solana. There's venues like Camino, Drift. There's, Loopscale, there's Exponent, there's Jupiter, long list. And these are all venues that, again, I don't see them going anywhere. They all serve specific use cases. So like off of what I just rambled off of like borrow lens, lending protocols, perps exchanges, interest rate derivative markets. And, when you get into finance, it's extremely multifaceted. There's, a bunch of different use cases and things. And when you're setting up a portfolio, you tend to have different configurations. And, I don't know a single DeFi user that uses just one venue. Every DeFi user I know uses at minimum 2, and usually it's something like 20 plus. It's usually a lot because that resembles finance. Like in finance, you have different needs and you need to go places to achieve that. And so Project Zero is essentially a place where your liquidity across these venues can be used within a single portfolio. So like a really simple example of what that means is if you have, a USDC lending deposit on Camino, for example, maybe like a wrapped Bitcoin deposit on Jupiter, and maybe you have a position on Drift as well. And let's say each of those 3 positions is $100. So you have $100 on Camino, $100 on Drift, $100 on Jupiter. Right now, if that's you, and that's a lot of people in this case with different monetary values, if you have a credit need, you need to go to each of these 3 venues and open up like an individual borrow against, 3 different positions and manage those 3 different borrows. And it gets really complex.
It's nightmare fuel. So I just had to add that in there. It is the worst. Yeah. I've done this. It's the worst thing ever. It's terrible.
Yeah, it's terrible. Yeah, thank you. Yeah, I mean, like I agree. I've done this too. So what Project Zero does is it allows you to borrow against that $300 portfolio in one click with, a singular LTV, singular risk parameters. And this is really important because as you start to set up more complex positions, you might have like offsetting exposure. So for example, maybe you're like long on Drift and short on Hyperliquid, and maybe you're really levered on both. So drift isn't going to let you borrow a lot because, if the market moves down, you're going to get liquidated.
Yeah.
And hyperliquid isn't going to let you borrow a lot because if the market moves up, you're going to get liquidated. However, when you view these two positions together, maybe you're delta neutral. And if the market goes up or down, you shouldn't get liquidated at all. Your margin should be automatically rebalanced, and it will be through Project Zero. And also you can borrow more because you have a safer position when viewed holistically. And so like that's also something Project Zero solves for.
That's when this, I knew about who you guys were, and then this came across my desk, and I was like, holy shit, I need to get Macbrennan on the show here. I love having guests on when they provide a solution to a huge problem that not only I have, but like you said, every single degenerate has. I don't know one person in crypto who wouldn't use this unless they never ever want to, lend and borrow against their portfolio. In TradFi, this happens all the time, right? And I'd love if we could jig and jag a little and just perhaps tell the listeners, and you have experience in this.
Yeah.
I didn't really know this up until probably 5, 6, 7 years ago about how the rich get richer. They half the time they don't even pay themselves a salary, right? Or they don't ever sell what they have. Their assets just keep growing, and they borrow against the value of those assets. Like this is what you are doing for crypto, and crypto is the nouveau riche. A lot of people are getting very wealthy in crypto, and you are literally providing a solution to, yes, people use this before, but it was a siloed solution, and it was very time extensive, excuse me. And now it's just a couple clicks, boom, you're dancing. So walk us through how this works at TradFi as well, because I think this will really help the listeners understand this better.
Yeah. So there's a bunch of different exchanges. For example, in traditional finance, there's like the NYSE, there's the NASDAQ, there's the Chicago exchange, there's the Hong Kong exchange, there's the Tokyo exchange, etc. And yes, for these like super wealthy guys in TradFi and gals, they typically have a diversified portfolio. So they usually are holding equities, commodities, some debt instruments, etc. And you tend to get these across different venues, different exchanges. And so what they do is they call up their prime broker, which is usually like one of the big banks in this case. And this bank sort of helps them collateralize their position across all these different exchanges and borrow against their whole portfolio. Basically what Project Zero does for DeFi. And that's like one example. Another example is maybe some trading firm is running like a trading strategy where they utilize spot, and like maybe they're like trading the underlying spot price, and they're also trading like the options on the options exchange in Chicago. And these are positions that need to be like combined to get like the best margin, the best like portfolio health. They'll also do this like through a prime broker, through a prime brokerage system. So it kind of like facilitates all ends of the traditional finance spectrum, from like high frequency trading to just your, rich uncle calling from his yacht in Italy, for his like diversified portfolio. But like the really cool unlock here is the people I'm talking about in traditional finance, like these are well capitalized players.
Yeah.
You never hear of, some like typical middle class family calling up their prime broker. That's not a real thing. Like,
no,
this is not tooling that's available to you unless you literally have like a certain net worth, or like you're managing a certain amount of like assets. The really cool thing here is that like anyone can use this in DeFi. So this is no longer like some gated tool to, the ultra rich. This is like for anyone. You can kind of act as your own risk manager. You can access the DeFi venues you want, and you can get unified capital efficiency against it. So
I love
that's
it.
a really like a cool additional inflection point that like DeFi kind of enables.
I love it. Look, so many avenues we can take this. Let's talk Solana. Why Solana? Why did you choose to start on Solana? If I did my research correctly, the goal is to not just be on Solana. The goal is to be on every blockchain and every possible avenue. And then once you're on every blockchain, I guess not even once, at the same time, in conjunction, bridging sort of that gap between TradFi and DeFi as well. But why did you start with Solana over every other blockchain?
Yeah. So in order for this product to work, we needed to build a credit and risk engine. And we wanted to facilitate a myriad of products. We wanted to provide unified capital efficiency against spot, against like perps in DeFi. If options ever emerge in DeFi, we want to be able to like facilitate that, interest rate derivatives. And the thing is a lot of these products are very fast moving. Solvency is really important for products like this, which essentially means you need to be able to liquidate them fast. And your risk system also needs to be able to update real time with the speed of these assets. And so for that, you need something, trustless and fast. And Solana is like in a league of its own when you look at those two variables together. So our risk and liquidity engine right now, where the credit comes from, where this like unified margin comes from, is built on Solana. It already has, I looked this morning, I think like 250 million USD in value in it. It's out of that, it's got about $100 million borrowed. So it's very capital efficient. It's got almost like half of its liquidity being utilized on the borrow side. And that is like, I don't have any plans of that ever moving off of Solana, because Solana sort of has the requirements for that. And that being said, crypto is obviously like multi-chain, and you can't ignore how well Hyperliquid's doing. You can't ignore how dominant like Aave has been.
Yeah.
And there's a bunch of examples like that. And so we can still unify your collateral on these exchanges. So like in a very tangible sense, that means like if you now have $100 on Aave and $100 on Camino, like two different borrow lends on two different chains, you can borrow against a $200 portfolio still in one click through Project Zero.
That's sick.
So yeah, we can go anywhere, but our credit and risk engine is built on Solana.
I love that. Liquidity fragmentation, huge. It's so funny, Macbrennan. Heck, you're almost number episode 500. We've been doing this since 2021, and there's a couple themes that have stayed the same since episode numero uno. Many have changed.
Yeah.
Heck, we went through the NFT phase. We went through multiple different weird meme coin phases, launchpad phases. A couple things have sort of stayed. One of them being stable coins and the importance of stable coins. One of them being centralized exchanges are still probably the ultimate use case of crypto present day. And then there's some problems as well, right? Interoperability, still a problem, but getting better. Liquidity fragmentation, I think, is probably the only problem that it really has just started to get better 5 years later. In the first 10 episodes, I heard about the words liquidity fragmentation a lot. And I was like, do I really understand this? Of course, now I do after, almost 500 episodes. But back in the day, it was a huge problem. It's finally getting a little bit better. You and a bunch of incredible other teams are working to fix this problem. How long do you think until this will, it's always going to be a problem, but how long do you think until this is just a small problem and not a big problem?
I think this will always be a problem. This is one of those problems that's kind of never ending, because there will always be new teams trying to build new stuff on any given blockchain. And some of this stuff is going to work, some of this stuff is going to work. And so when that stuff works, and when there's, users and liquidity in a specific use case for using that venue, it's going to break off a chunk of your portfolio if you want to use that. And there is no unified margin engine around it. So that's like one of the fun things with this product. It's we'll never be done. Like, we'll always be adding venues. Now, in the past, like, to be fair, a lot of like crypto's gone through a bunch of ups and downs, obviously. And so if you would have built this product in the past, it would have been a different stage of like crypto, smart contract risk, financial risk, market risk. Like, some of these venues might not last more than a year. So it might be like a lot of like wasted efforts in integrating them. I think timing is really important with this product, because like, again, now there's products that, I can very confidently say they're not going anywhere. They got great teams behind them. They're solving like specific like use cases that people have a real need for. And so there will always be, people with part of their portfolio on XYZ venue.
Yeah.
And so given that, essentially the minute you're using more than one venue, it's our job to give you better capital efficiency, better risk, better UX, better portfolio management. And so this will be a problem that never gets fully solved, essentially, but we'll try to keep up as best we can.
Yeah. A little side note, but Did you ever find it funny how, I guess Ethereum is probably the poster boy of liquidity fragmentation, but, and then you have
Yep.
Hyperliquid who's come in and learned from the Ethereums and the Solanas and said, hey, you know what, we're gonna build the exchange, and then we're gonna sort of build the blockchain kind of thing. We're gonna keep the liquidity
Yeah.
in-house. We're gonna have not zero, but very little minuscule liquidity fragmentation. Do you ever go back and wonder like how big Ethereum really could have been if they did things right from the get-go? Like in a weird world, and maybe I'm way out to lunch here, but I think if they did things right, I honestly think Ethereum could have perhaps surpassed Bitcoin. Like that ass. Hot take, obviously.
Yeah. Yeah. I think this is just a fundamental different approach. And I don't know if one's right and one's wrong. Like analogies are always like
Of course. Yeah. Hindsight, 2020.
weird, but like one is sort of like top-down planning and one is essentially like bottoms-up planning. And so like Ethereum has had bottoms-up, unincentivized
Yep.
like contributors. And that's great. Like that is there's really nothing wrong with that approach. And Hyperliquid has gone very like top down, and it's managed very closely by the founding team, and they've done very well with that strategy. Both of them still create inevitable capital fragmentation, though. Like again, like if you have the minute you're using Hyperliquid plus something else, you have capital fragmentation. So
Yeah.
so like this use case doesn't go away with either approach, really.
Yeah. Well said there. Let's talk about goals here. Doing research for the show, your goal is to become the go-to hub for institutions entering DeFi. Maybe I'm completely wrong here. It seems like off the bat, this is more consumer faced. This is more for the degens and more for, which I feel like a lot of the time you got to start that way. How do you guys achieve that end goal of getting all the institutions on board as well?
Yeah, I want to serve like the immediate market first for sure. So like some of the immediate market participants, one is like just your passive yield farmer. Like if
Yep.
you're if you're looking for great yields in DeFi,
Yep.
you're not just using one venue, you're using multiple venues. But the minute, maybe some trading opportunity comes up on Solana, you have fragmented borrows. Like maybe some
Bingo.
AMMs you're farming yield and you can't even borrow against that position at all, right? Like maybe there's no native borrow functionality. And so for something as simple as like that use case, like Project Zero is a solution. Like again, if you have, capital spread across 3 venues, you can borrow against your combined portfolio at once with like, again, like a single risk parameter or a single set of risk parameters around that borrow. And then on like the more sophisticated side, yes, like if you're like starting, if you're an algorithmic trader, if you're like a prop firm or maybe a single, sophisticated market participant, now if you're doing multi-venue cash and carry trades, perp funding trades, spot, like any sort of spot derivative trade or derivative trade or spot to spot trade between venues, even if you're like market making, which is inherently, like multi-venue and you have
Yeah.
fragmented liquidity, this product should give you a much, much better time, both from like point and click, functionality if you're using a UI, also from like a development functionality. Like this should be like a single SDK that you plug into that gives you superpowers all over all the individual venues that we have integrated that you're using. So kind of from top to bottom. And that's where we're very focused on to start, is like both sophisticated users and very like
Yeah.
passive retail users that have fragmented portfolios. Once we solve that use case, I think we can start to like think a lot bigger in terms of what a more like institutional, in quotations, market participant is looking like. I kind of view institutional market participants as like many people think of what institutional means, as like 2 buckets essentially. One is people that want exposure to crypto, the asset class, and so that typically manifests as like, I'm just going to buy a bunch of Solana, maybe I'm going to stake it, and I'm good. And so for that, we can facilitate a lot, because like if these people are just staking it, they usually can't borrow against that, but you can permissionlessly through P0 and some of the products we have, as well as if it's in like an LST. So we're solving for that use case. And then like the other bucket that institutions kind of view DeFi through is there's a lot of opportunity across these DeFi venues and across these yields and these prices and these rates, etc. And so I'm going to set up like a special purpose entity that's able to be more nimble around these on-chain venues and maximize them to the full extent. And that definitely can be optimized through P0. So yeah, I think like top to bottom, we're very focused on like immediate market participants, which is people in search of great yield and people going after like more sophisticated trading activities. And then given we are effectively serving those users, I think the opportunities for like big money institutional
Love it.
users is much more straightforward. Yeah.
Well said. Macbrennan, you're on a roll here, mate. We got to take a quick break and give a huge shout out to our sponsor of the show, PrimeXPT. And when we get back, we're going to keep buzzing. Huge shout out to PrimeXPT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at PrimeXPT as they offer a robust trading system for both beginners and professional traders. It doesn't matter if you're a rookie or a vet. You can easily design and customize your layouts and widgets to best fit your trading style. PrimeXPT is also running an exclusive promo for listeners of the Crypto News podcast. We love the team. They are the GOAT. And guys, the promo code is CryptoNews50. That's CryptoNews50, all one word. Again, CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, that's CryptoNews50 to receive 50% of your deposit credited to your trading account. And now back to the show with Macbrennan. Okay. What other areas of crypto? I mean, I feel like this is a wild time we're in right now. Everyone, I mean, not even just statistically speaking, October is nicknamed October for a reason. I don't even know if we're going to have an October. I mean, the last couple of days were a bit of a bloodbath. I saw a couple of great tweets the last couple of days. No one knows if a rate cut's penciled in anymore. Gold's hitting all-time high. Market's still ripping, even though it shouldn't be ripping. Crypto and TradFi decoupled for a bit, and then decoupled again, and then coupled. What the hell is going on? No one knows. Maybe let's start with some themes. Let's not talk about the market because this ain't a price prediction podcast, but themes in general. We could talk hyperliquid ripping. We could talk about the crazy perps war that's going on right now, CZ in crime season, classic CZ crime season with Aster, lighters picking up steam. We have pumped up fun and the crazy streamers literally doing absurd shit in real life, pissing people off to make a bit of money, then rugging people. I mean, we have Aster, or excuse me, we have, what's it called? We have Plasma popping off this week. Turns out Plasma is not even really a crypto, it's a neobank. Where do you want to start? What is top of mind for you right now outside of what you're doing?
Yeah. Well, there's always trends in crypto. And, I've always tried to stay away from that as from like the POV of building a product. Like if you're building a product, you got to have sort of this long-term vision, this reason for it, this market justification for it, and sort of like build through a lot of the action. And so I think like what we've seen recently is we've seen entertainment finance become like a very solidified thing.
Yes.
And there are teams tackling that, and there's teams doing really well with that. And that's great. And that's kind of like a new category in finance in general. And I think we'll probably see more and more of that. I don't think that's going anywhere. We see people starting to figure out really great ways to trade on chain. Like so actually everything here is really cool. So financial entertainment, new category, doesn't really exist in traditional finance. Cool. That's crypto native. Then like trading, we struggled in the past in DeFi in getting prices competitive with like off-chain venues. Like Binance has just destroyed us for years in terms of pricing and liquidity. And now that's not happening anymore. Now, like you're getting really good prices on Hyperliquid. You're getting really good prices on Solana for SPY currently. There's like the evolution of like proprietary AMMs, which are offering literally tighter spreads than you're getting on Binance. So check two, like all of a sudden prices on chain are better than off chain. And by the way, like people are paying crazy fees when they're making like swaps on like Coinbase and Binance and Bybit. Like all these exchanges have obviously built an incredible business, but you can get better prices and lower fees on chain right now. So like check two, sort of going along just the stuff you've mentioned. And it's gotten to the point where it's gotten so good that CZ's like, shit, I got to get in on this now because, I got to evolve as any smart businessman would do. CZ's not a dummy, clearly. So So yeah, now he's, starting to innovate as well. So so those are two things that are kind of like net new. DeFi's sort of pioneered. Now in my little corner, I'm seeing a lot of like credit markets get to the point where the risk with these credit markets is on par or sometimes like better than you're getting off chain. Like you can immediately audit the solvency of, of Aave, of Camino, of marginfi, of Drift, etc. You can see like, do these guys have enough money to pay me back essentially at any point? You can see like, you're not going to run into any sort of immediate like account holds, or like they can't just take your money, and there's no sort of limits on like the amount of like withdrawals and deposits you can do with like within a certain period, which is like not possible on your bank. Like
Yep.
the P0 program, the Project Zero program, is built on the marginfi program, which has handled like hundreds of millions of dollars of deposits and withdrawals in like single days, which like your local bank literally cannot do. So like we're also seeing credit markets start to become more sophisticated and better tools than like your traditional off-chain accounts. So that's where I'm pretty fascinated right now. Trading's being tackled by a lot of like really smart teams. Entertainment finance is being tackled by a lot of like really smart teams. And credit is also being tackled by a lot of really smart teams. And I'm sort of like just building on the foundation that they've all established. So like Project Zero is essentially like a levered bet on the success of each new venue we integrate. Like if we spend a lot of time, Camino is going to go live as our second venue October 8th. So we spent a lot of time working on this Camino integration. We audited it. As people use the Camino integration through Project Zero, they're going to be depositing liquidity into Camino's market. It's very advantageous for any like venue we integrate.
Yep.
This would be a lot of wasted time if I thought like Camino was like gonna die in a year or something like that. Like I clearly don't. Like this is a levered bet. I want them to be successful because that makes Project Zero better. So we're at that point now. Like the one missing theme, like we talked about liquidity fragmentation, but one other thing that was kind of like crypto's original, like programmable crypto, its original promise with Ethereum was composability. Was like, okay, now people can spin up any asset or spin up any program and anyone else can just build on it. And things start becoming really cool and non-permissioned. And that's the thing that we also kind of haven't checkmarked yet that we're working on at Project Zero, which is that, okay, now there's a lot of cool venues that people use that have staying power, et cetera, that, all the things we talked about. Let's build cool stuff on top of them, essentially. And so like Project Zero is in many ways built on Camino, built on Drift, built on Jupiter, built on every venue we integrate. And that's something that I also cannot do in traditional finance. I can't just like build a product on top of like on top of Chase Bank and allow people to just deposit into a Chase Bank account without going through a million hoops. So that, I think that's cool. That's like my focus right now. Yeah.
I love it. Hey, what an end of the show. Wish you had more time to do a proper banger, but I'll definitely have to have you on for round two. Any news before we let you go here, mate? You guys are moving and grooving at a crazy pace. You just dropped the Camino integration October 8th, I believe that was.
Yeah.
Anything else to look forward to? Mind you, this episode is going to air on Thursday, September 25th. Any news that you can drop before we let you go today?
Yeah. So the P0 market is live now with, again, 250 million deposited, 100 million borrowed and growing. Camino, our second integration, is going live October 8th for early access users. We start opening up token discussions to the community on October 15th for Project Zero. Drift and Save are in audit as our third and fourth integrations currently, and we expect that to go live end of October or early November. Then we intend to wrap up with Loopscale and Jupiter Lend and essentially get 100% coverage of Solana lending venues. And then at that point, we're looking to tokenize, and we're looking to tokenize before what we deem some of our most like consequential integrations, which is perp markets. So after tokenizing you'll get to trade perp markets, think again, like Hyperliquid Drift, Jupiter perps, etc., with your collateral now across, Camino, Drift,
That's
Save,
fun.
Loopscale, Jupiter, marginfi, and be able to set up like delta neutral positions, cash and carry trades, like do really custom portfolio margin configurations. So that's what we're immediately looking forward to. Yeah.
I love it. Before you go, where can our listeners find you personally, and of course P0 online and on socials?
Yeah. So on Twitter, P0 is at 0.xyz. And that's also the domain. It's a single number domain, 0.xyz. If you want to try Project Zero. On Twitter, I'm Macbrennan_cc, which is also like if you want to visit my website, macbrennan.cc. And yeah, you can get most of it there from our website. You can also visit our like Telegram and our Substack and other thing, or Discord, etc. But yeah, you just got to go to 0.xyz or at 0.xyz Twitter username. Yeah.
Love it. Folks, we're in an episode with Macbrennan Peet, founder of Project Zero, aka P0. What an episode. Touched a little bit of everything. Creating the first DeFi native prime broker on Solana, borrowing against your entire, and yes, that is entire DeFi portfolio, building a credit risk and engine, liquidity fragmentation, entertainment fi, you name it, we covered it. Huge shout out to Macbrennan and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe, hammer that like button. It would mean the world to us. To the Cryptonews team, love you guys. Thank you so much for everything. Daryl, you're crushing it as always. And back to the listeners, love you guys. Keep on growing those bags and keep on staying happy, healthy, and wealthy. Jeez, forgot the most important one of the three there. Guys, Q4 is coming up. October's coming up. Lock in. You won't want to miss this. Love you guys. Thank you as always. And we'll see you on the next one. Ciao.